we've spoken quite a lot about the growth and growth potential. So let's get on to that part of the strategy which now turns that into returns to shareholders. So talk to us about scaling, leverage, those kind of things.
For a number who've been we have institutional investors who've been with us from the beginning. So we listed on AIM December 2014. And when we listed, the logic was a hybrid investment model.
Yes.
So we'd have managed funds and we would selectively invest from our balance sheet capital into businesses emerging from those, what we used to call emerging stars. And we build up our balance sheet investments, build an evergreen model, and we can recycle capital. And that was how we started our journey. Our asset management area, the funds under management, has performed very, very well and has broadened out through organic and acquisition. And the city's perception on private holdings versus the private market's perception on private holdings are poles apart now.
Yes.
So there's a degree of cynicism, and valid for some, when I look across at other managers, valid in some cases, but there's a degree of generic cynicism in terms of the value of a holding. And fundamentally, you can only demonstrate the value of a direct holding when you sell it.
Yeah.
That's a single point when you're, will you write or not? And historically, we've sold everything on our balance sheet above holding value. So we're confident in that.
Yeah.
However, there is cynicism, there's industry-wide cynicism, it's publicly known. So we made a commitment now, a little over a year and a half ago, to what we call the Mercia 27. And for Mercia 27, that was a commitment to really do what we're very good at, which is grow our private capital under management, our third-party funds under management, from what was 1.8 billion, and the target is 3 billion. So grow that. Grow the profitability of the group as well. We're a dividend-paying business.
Yes.
So grow the profitability of the business and service what we call a progressive dividend, and simplify the business. And by simplify, it means take that distraction, the direct investments, away by selling those down pragmatically over that 3-year period. And we made a commitment to sell up to 70% by value of that opening book value back over a year and a half ago now, and use that capital to fund our funds under management, to return capital back to our shareholders, and to make selective acquisitions with.
Yeah.
And that was a commitment we set out on, and is a commitment we're driving forwards. And this is the right thing for us to do as a listed business in the current environment.